Hello, good morning, ladies and gentlemen. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this party started. Okay, Carrie, good morning. Thank you. Thank you for that confirmation. Great. Okay. So once again, I want to welcome you all to yet another promising session of Extra Speed Life, hosted by my humble self, Sheriff Daramola. I will be taking you on a trading journey where we shall be evaluating the financial markets, hereby using various technical parameters to identify trading opportunities lining up for us during the New York session today. If you have any pair or commodity you want us to look at today, feel free to drop it in the comment section and I will try as much as possible to include it in my schedule for today. So without further ado, let's dive into the chart and let's see what is happening in the market right now. And the first pair we're going to be deliberating on today is going to be the US oil. And one thing I want to be doing this morning for the sake of clarity is that I want us to go to the higher time frame, especially for those who are not part of the session yesterday, so that we can see where our decision of taking a bullish momentum came from. So scaling up into the daily time frame, well, the first thing we observed on the daily time frame on the US oil is that price has been bullish in the last 2 years. And after connecting the series of higher lows, we were able to identify a resultant bullish trend line which was drawn on the daily time frame. And in addition to that, one thing we are going to be observed after drawing that bullish trend line is that during the last couple of weeks, we have seen our price has come back to do a multiple rejection of that bullish trend line to give us a clue into the strength of the buyers at this point in time. Hence, we want to be looking for buying opportunity right from that area. So with this information that we've gathered here on the higher time frame, we were able to scale down to the 3 hours time frame to and on the 3 hours time frame, what did we observe here on the 3 hours time frame? On the 3 hours time frame, we were able to connect the series of lower highs here. That is from, I think, somewhere in month of June, we were able to identify this resultant bearish trend line after connecting the series of lower highs here. As you can see, I'm trying to show this scenario on the screen. So we had this scenario here. And one thing we observed during the mid-month of August was that we saw a breakout of that bearish trend line, giving us a clue into a possible momentum shift at this point, as the breakout of this bearish trend line indicates that the bearish trend line we were able to identify here is no longer strong enough to hold price action to the downside, and at the same time supporting the bullish perspective we identified on daily time frame. So with this scenario and with a breakout of that bearish trend line, we begin to look forward to bullish momentum here on the US oil. And when we scale down to the 1 hour time frame where we were able to identify that opportunity, what we saw here during the live session yesterday was that we should be using this $93 level as a yardstick for bullish momentum on the US oil. And interesting enough, what happened during the course of yesterday's trading session stroke this morning, we saw our price did multiple rejection of that $93 level. We saw the first, second, and we saw the third one here before that bullish engulfing candle took price out of that zone to give us that bullish momentum we were looking for yesterday. Now, if you are taking advantage of that move as projected here, kudos to you for being on standby to be able to enjoy that rally. And right now, price moved about how many pips in price moves over 400 pips in profit before we started seeing this retracement move to the downside. So now that we already have a scenario here now and we are already profitable in this trade, you would have likely taken your profit or probably still in this trade if you are a long-term trader. So for those who are actually taking their profit, it's okay. But for those who are still in this trade, who are yet to take their profit on this one, I will be suggesting that we move our stop loss to break even at this point. And the reason why that is simply because we are actually projecting a long-term perspective on the US oil. And remember, I shared with you yesterday how our take profit target still remains at around the $104 area and the $116 area. So if you are aiming at a long-term perspective on this one, you can just move your stop loss to break even. And for those who are taking their profits, kudos, well done to you for enjoying that move. Now that we are heading into the New York session, what is going to be our plans? Now, heading into the New York session, first of all, I want to call our attention to the bullish trend line we identified here on the 1 hour time frame, and that was as a result of connecting the series of higher lows. Here we can see we saw higher lows and we were able to identify that bullish trend line. So now with the bullish move that started yesterday, what is going to be our expectation? Are we going to be seeing price come back into that bullish trend line with the motive of a bullish continuation? Is that what we're going to be seeing today? Well, that is one thing we want to be looking at. And the other scenario is price going to come back into the $93 level, or probably the structure here to push price to the upside? So the most significant thing we want to be looking at here is to see how this retracement phase is going to end and where it's going to end. Now, if we look at the structure we had here since yesterday, that price climbed from the $93 level, we can see that as soon as price got to somewhere around the $98 level area, we saw multiple rejection of that level, giving us something that looks like a reversal pattern that resulted to this engulfing bearish candle that took price out of that structure. So what this simply means is that this is likely going to be a retracement phase of the previous impulse leg we identified here. So we have this impulse leg and this is the retracement phase of that impulse leg, but we don't know how far this retracement phase is going to go. But there is a golden rule we used to use here to identify such scenario, that is our golden zone area. And if we bring out our Fibonacci retracement tool at this point and run it through the previous impulse leg, what do we have to aim at? We aim at the 50 and the 78.6% of the previous impulse leg. So if we have our Fibonacci retracement drawn along that impulse leg here, so we have between the 50 and the 78.6% as an area we want to be looking to join the trend continuation. So what I want to be doing here is to identify this area by calling it our buy zone, and let's make this a yellow so that we can have a better clarity. Okay, so this is what we have here now. So right now we have a buy zone that we want to be looking forward to during the New York session today. And remember, we have the $93 level, which has been our yardstick since the beginning of the week. So one thing I want to be looking forward to here on the US oil is that I want to see price come right within the buy zone area, that is between the $94.50 area and the $92. Is it $92? Okay, we can call it $93 area. So I want to see price come into this area with something that looks like a reversal pattern. It could be your double bottom structure, it could be your inverse head and shoulder pattern, whatever pattern that is. We want to see a reversal pattern right here. We want to see patterns, we want to see structures that supports a trend continuation to the upside from this point. So for those who are still in this trade, I told you to move your stop loss to break even. And for those who are taking their profit, kudos to you. And for those who are yet to join this rally, well, we still have another opportunity to join the rally as long as we see price come back into the buy zone here. Then we look out for patterns that will support a trend continuation to the upside from this point. So this is what we are going to be looking forward to on the US oil. Our perspective on the US oil still remains very, very bullish, and we want to be using that bullish trend line we were able to identify here on the 1 hour time frame to guide our actions going forward. Now, a note of warning is this: if at any point in time we see price break down that bullish trend line, that is, this retracement move breaks down that bullish trend line, we want to be very, very careful. Despite the fact we're expecting a bullish momentum, a breakdown of this bullish trend line could probably be a signal that we might be having a momentum shift. And if that happens, that if we see an engulfing candle taking price out of the structure here, then we want to be patient enough to wait for confirmations that this is going to be a bearish momentum. So what we want to be looking forward to is price coming back to do a retest of either the $93 level or probably the bullish trend line here, after which we look out for patterns on lower time frame that supports a trend continuation to the downside. So this is what we want to be looking forward to as a note of warning. So if we see a breakdown of that bullish trend line, then we should be thinking that a bearish momentum is probably coming in. So that is that on the US oil. So our perspective still remains very, very bullish here, and our take profit target on a long-term perspective is within the $104 area and the $116 area to take our profit. So this is my scenario on the US oil. If you have any question whatsoever on this one, feel free to drop a word or two in the comment section and let's look at it together. Okay. Oh, Pep 80, good morning to you. Glad to see you. Ramona 85, good morning. Geopoker, good morning. All right, so let's move on to the next pair. And the next pair we were looking at yesterday was the US Tech. Hold on a second. So the next pair we looked at yesterday is the US Tech. And remember how I told you we were able to enjoy this bearish momentum last week. We took over 700 pips last week, and in the last 2 weeks we've had over 1,400 pips to catch here on the US Tech as price continued to the downside since mid of this month of August. And I was able to share with you the scenario that was happening during the early hours of yesterday, where we saw our price as being consolidating between the $12,500 mark and the $12,380 area. We saw how a consolidation phase happened there on the 1 hour time frame. Let me show you the 1 hour time frame where I explained that to you. So we saw this consolidation phase here on the 1 hour time frame, right between the $12,500 mark and the $12,400 area. And one thing I shared with you yesterday was that we want to be patient enough to wait out for signals before we can join any potential opportunity here on the US Tech. And one thing I said here is that we are going to be waiting for a signal which is likely going to come in form of either a breakout of the structure to the upside or probably a breakdown to the downside to give us that signal we're looking forward to. And lo and behold, what happened here on the US Tech was a signal to the upside. So as soon as we saw the signal to the upside, that gave us a clue into the bullish potential here at this juncture in the market. That's around the $12,500 area. We can see buyers are coming in to buy the US Tech. Now we saw a retest of structure with multiple rejection on lower time frame, then we were able to join the rally to the upside. So one thing we are seeing here is that participants in the market are probably seeing the US tech as very, very cheap at this point, and they are thinking it's worthy to buy the US tech. So if you are taking advantage of that move yesterday, presently you will be running with about 140 to 150 pips in profit at this point in time. And what I will be advising you to do here is to lock in your profit. We're suggesting you move your stop loss to your entry zone just to protect your position against any sudden pullback that will likely happen. Now that we have identified that we are within a temporary bullish trend line, I'm calling this a temporary bullish trend line because of the impulsive move to the downside that we witnessed in the last 2 weeks. We can see that price has been on a bearish momentum in the last couple of weeks, and we want to take that into consideration as this bullish move is likely going to be a retracement of this impulse leg that we have here. So remember, we had this impulsive move last week, and we want to be seeing this bullish potential as a retracement of that impulsive leg to our golden zone area, which also shares a confluence with the bearish trend line we were able to identify on the daily time frame, and also the key level we have at around the $13,000 area, after which we might be looking forward to a reversal pattern around this point that will push price to the direction of the prior leading price action. So this is what we are looking forward to at this point. We were able to identify the TP target zone for this buy opportunity between the $12,800 mark and the $13,100 mark. How did we identify this level? Well, this is simple. We brought out our Fibonacci retracement tool, and then we run it through the previous impulse leg here, and we were able to identify our golden zone area, which is right between the 50 and the 78.6% of the previous impulse leg, as an area we want to be looking forward to a possible reversal pattern that will likely send price in the direction of the prior leading price action. So the reason why we're having that take profit target is simply because of the bearish momentum, and at the same time we want to see how price is going to relate with this area, that is the area around the 12,900 and the 13,100 area, after which we're going to be looking to take another trading opportunity if we see either a breakout of the structure or probably a reversal pattern right under the structure to send price to the downside. So our momentum here, the bullish momentum we've identified here, is going to be seen as a temporary bullish momentum considering the long-term bearish momentum we have here. Now, in addition to this information I've given, I also want to share with you another parameter that should be our guide going into the New York session today. You see, after looking at the consolidation phase we have here since the beginning of the week, we can see that price has been finding higher lows. And one thing I want to be doing is to connect the series of higher lows here to get this bullish trend line. And this bullish trend line shall be our guide as we want to continue to see price oscillate right above this bullish trend line. So if price at any point in time come back to retest this trend line that we see multiple rejection, we might want to be adding more position to our existing trade. So we have a bullish trend line to guide our actions during the New York session today. We want to see price continue to respect that bullish trend line, and in addition to that, and especially for those who are yet to be in this trade, one thing I will be saying here is this: I will be identifying a key level for us here at around the 12,570. Is it 12,570 area? Let's give this a purple, and let's label it 12,570. So we have okay, so we have a key level here, and the reason why we are identifying this level as a key level is simply because we saw how this area as being a resistance point. We see it as a selling niche in the past before we witness the final breakout of that structure during the early hours of today. So there is a likelihood that after this breakout of structure, we might be having price come back to do a retest of the $12,570 area with structures or patterns on lower time frame that supports a trend continuation to the upside. So if you had missed this move to the upside from here, then you might want to be waiting for price action to come back and do a retest of the $12,570 level, after which we look out for patterns on lower time frame that supports a trend continuation to the upside. So this is what we are looking forward to here on the US Tech. So we should be on standby to take advantage of that move if you are yet to be in this trade. So without further ado, I think we should move on to the next pair. But if you have any question whatsoever regarding what I've discussed so far, feel free to drop a word or two in the comment section and let's see how we can be of help. So now the next pair we're going to be looking at is the USD Jpy. And on the USD Jpy, remember how I told you that we are on a very strong bullish momentum on the USD Jpy. Let's scale up into the higher time frame so that we can see what we're talking about before we come into how we intend to take advantage of that move. Well, on the daily time frame, if we look at the structure we have on the daily time frame, price has been on a linear bullish momentum since the beginning of the year, and as a result of that, we were able to identify this bullish trend line. And if you look at the structure here, especially since the month of April, March/April thereabout, we have seen, hold on, oh, that is a mistake, sorry. So we have seen our price has consistently respected that bullish trend line. We saw the first, we saw the new high. Price came back to form a double bottom structure around this area. We saw a breakout of the neckline of that structure, and price appears to be rallying up into the upside. So now with the scenario we have here on the daily time frame, it is obvious that we are on a very strong bullish momentum, and because we are on a strong bullish momentum here, we want to be looking at the opportunity of joining this rally, especially if we had missed this move right from this point. So what we did during the course of yesterday was to scale down to the 1 hour time frame, where we tried to see how participant in the market has been doing in the early hours of the week. Now, one thing we noticed during the early hours of the week was that price has been strong on the bullish side. We can see we had engulfing candle that took price right out of the 137.700 level. We saw our price move out of that level during the early hours of the week. Now remember, we have a demand zone here. We have a very strong demand zone around this point. We saw multiple rejection of this level during the course of last week's trading session, giving us that clue into the strength of the buyers at this point. And that demand zone resulted in this impulsive move to the upside. We saw this impulse leg, and one thing we observed is that as soon as price tested the 139.00 level, we saw multiple rejection of that level, which transposed into something that looks like a double top structure, which is a very strong reversal pattern from a technical perspective. So now that we have something that looks like a reversal pattern, we saw the second touch, which is lower than the previous high, and we expect a breakdown of the neckline of that reversal pattern to push price to do a retracement phase of that impulse leg. So what we did here is to look out for how this retracement phase is going to end. So one thing I want to do first of all is to share with you that reversal pattern we identify here, and let's have the neckline of that reversal pattern. So we have a neckline here. Let's bring up back our candle chart. Let me show you what that is again. Let me do some readjustment here. So we have this impulsive move to the upside. We have the first touch, price came to the neckline. We saw the second touch, and now we witnessed a breakdown of the neckline, and it appears we're seeing a retest of the neckline to give us that confirmation that a bearish momentum And I want to be seeing this bearish momentum as temporary at this point in time, considering the long-term bullish momentum we have here on the USD JPY. So now what we are going to be waiting for right now is to wait for the culmination of this retracement move. So where is the retracement move going to end is what we want to be looking out for during the New York session today. So to help us to identify that, I was able to bring out our Fibonacci retracement tool here and run it through that previous impulse leg that we have at this point. And when we do that, we aimed at between the 50% and the 78.6% of the previous impulse leg. And when we do that, we see that we have an area between the 137.700 area and the 136.800 area as an area we want to be looking forward to for buying opportunity during the New York session today. So what I'm simply saying here is that I'm expecting that this retracement move is likely going to come as far as this area, probably a sharp rejection of the 137.700 area, or price could plunge further into the zone here at around the 137.500 and 136.800 area to form a reversal pattern that is likely going to be pushing price to the upside from this point. So this is what we want to be looking forward to during the New York session today. So I'll be advising that we remain very patient and wait for price action to come and do a retracement into somewhere around this area so we can take advantage of that bullish momentum to the upside. Now, if we look at the reversal pattern we identify here, that is price action, we saw the double top structure at this point. For those who love doing counter trend opportunities or those who like taking short-term trades, you might want to take advantage of this move to the downside. Well, this is a counter trade opportunity. If you are comfortable taking a counter trade opportunity, you might want to be taking advantage of this move to the downside, which will be dovetailing to about how many pips that is. That's around 70-80 pips to catch here minimum, and with a maximum of over 100 pips to catch. So if you are comfortable taking advantage of a bearish momentum, then you might want to be taking that move to the downside from that area. And one thing I'll be suggesting, if you are taking that move to the downside, you want to be mindful and make sure that you are locking your profit as price moves in towards your direction. As remember, this is a very strong bullish momentum and you don't want to get caught within a sudden spike to the upside on this one. But if you are me, like a long-term trader like me, then you want to be patient enough to wait for price to come back into our buy zone area, or probably come as far as the key level we identified, the 137 Japanese yen level, to join the rally to the upside. So if we are joining the rally to the upside here, where will our take profit target be? Well, the first thing I want to say here is this: we have an impulse leg here. So what we want to be doing is to project this impulse leg to the future so that we can identify our first take profit target area, and that is something like this. So what we do here is to bring out our Fibonacci extension tool, run it through the previous impulse leg here, and what do we have? We aim at an area between the 127.2 and the 1414 area. So if we have between the 127.2 and the 1.14 area, so we have somewhere around the 140 Japanese yen area as an area we want to be looking forward to as a take profit target zone. So let's label this for the sake of clarity so that we have a visual understanding of what our expectations are during the New York session. So we have something like this. So we have somewhere around there as our take profit target as soon as we take advantage of that buy opportunity, which will be dovetailing to at least a minimum. I'm just choosing right from above the 137.700 level. So we have somewhere around minimum of 200 pips to catch here if price moves as expected. So let's see how price plays out during the New York session today. So we are waiting for price to come back into our buy zone here, or probably a sharp rejection of the 137.7 area, after which we want to be looking out for patterns on lower time frame that supports a trend continuation to the upside. So in the meantime, we are looking at that area, and that is that on the USD JPY. If you have any question whatsoever, feel free to drop in your inquiry in the comment section, and let's see how we can be of help. So that is that on the USD JPY. So moving on, the next pair we looked at yesterday, after we looked at the USD JPY, is the USD CHF. And on the USD CHF, remember we have a similar scenario with what we had on the USD JPY. But before I go into further details on that, let's scale up to the daily time frame so that we can see what led to our bullish expectation on the USD CHF. So when we looked at what is happening on the weekly time frame, the first thing we'll observe here is that we are on a strong bullish momentum since the beginning of the year. We still see our price has consistently respected this bullish trend line. We can see we had the first touch in January. We had another one in the month of March. We saw another one in the month of April. And then we saw one lately in the month of August. That is mid month. I think on the between the 8th and the 15th of August, we saw another sharp touch of that bullish trend line to give us a confirmation that a bullish momentum is imminent here. Now, when we scale down to, let's say, the 4 hours time frame, hold on a second, let's go to the 4 hours time frame. So on the 4 hours time frame, and we look at the structure we have here on the 4 hours time frame, and if we go as far back as the mid-month of June, we can see that price has been bearish. And as a result of that, we were able to identify this bearish trend line, which was later broken during the course of last week's trading session. We saw the breakout of that bearish trend line to give us a clue into a possible momentum shift, as the bearish trend line appears to not be strong enough to hold that bearish momentum anymore. So now that we have this kind of scenario here, that is, price has broken out of the bearish trend line. We had the breakout here during the course of last week's trading session. Price came back to do a sharp rejection of that trend line, after which we started seeing a trend continuation to the upside. So what we want to be looking forward to here is to see how this price action, how price movement has been around this area. We want to look at the structure to identify a trading opportunity for ourselves during the New York session today. So if we zoom in closely into what structure we have here, by going down to the 1 hour time frame, right on the 1 hour time frame, the first thing we observed during the course of last week's trading session was that price consolidated around the 0.9600 area, gathered some momentum and pushed price to the upside, and we started seeing engulfing candle that took price out of that 0.9600 level to give us that signal for bullish momentum that we're looking forward to. Now, price break out of that level, and as soon as price broke out of that 0.9600 level, we started seeing the 0.9607 being retested multiple times during the course of last week's trading session, and we can see how that 0.9600 area has multiple times rejected that area. Now, during the later part of last week's trading session, we saw a significant breakout of that structure. So heading into the new week, we were able to see that this move to the upside is a signal that we should be looking forward to bullish momentum. And as soon as the week began, we saw our price rose from the 0.96460 area to as far as the 0.9700 area, and we within a consolidation phase right now. Now, with the current structure we have here, despite the fact that we've observed and identified a bullish trend, it is very, very difficult to just join this rally at this point. So one thing we want to be looking forward to is a very, very good area to take advantage of this move. And now, if we take into consideration this bullish impulsive move to the upside here, one thing we want to be looking forward to is a retracement back into an area, a technical area that we can be looking forward to a buying opportunity to join the trend continuation to the upside. So in that regard, we were able to identify a buy zone right around the golden zone area, which I've always mentioned is right between the 50 and the 78.6% of the previous impulse leg. So we have an impulse leg here, and we expect that price is likely going to come in between this area where we want to be looking forward to buying opportunity. So what we want to be looking forward to within that area is a reversal pattern. So let's see how price is going to play out this week. Sorry, this New York session today. Are we going to be seeing a sharp rejection of this level, or are we going to be seeing a double bottom structure, or a inverse head and shoulder pattern that will be sending price to the upside from here? So this is what I'm looking forward to on the US tech. So let's see how price is going to play out in that regard. However, there is something that caught my attention when I looked at the structure we have here. We can see what has been happening in the last 24 hours here. We can see we had a strong consolidation phase here, hereby depicting the indecision that has gripped the market at this point. Now, if we look at the structure very, very closely, we begin to see that we have a pattern around this area. So now let me bring out my line chart here so that we can draw out this pattern. Then we look at this pattern and see how we can take advantage of any opportunity here. That is, if price does not come this far, let's see if price is going to continue from within this consolidation area. That's what we want to look at right now. So I was able to draw this, then identify this one here. Let's make this like this. Let me bring out my, okay, so we have something like this. And now we have a breakout of that structure. You can see we have a breakout of that triangle structure here. We had a consolidation phase. Since the beginning of the week, we saw this consolidation phase here, and we saw an outright breakout of that structure. So one thing we want to be doing is to see this as a signal. Remember, we don't want to get too excited. Price already far away. What we want to wait for is a confirmation that price is going bullish. So we want to wait for price to come back to either the structure here to give us that reversal pattern on lower time frame to join the rally to the upside, or we could be having an outright breakdown of that level. It could be a very sharp one that will be sending price back into this buy zone area. It could be a sharp rejection of that area, but in this case we want to scale down to a much lower time frame. You could go to your 5 minutes time frame to look out for the sharp rejection, after which we look out for patterns to join the rally to the upside. So with all this being said, it is obvious that the trend we are looking forward to on the USD CHF is a bullish momentum. So we are looking for opportunities to buy the USD CHF right now. So that is why we've been trying to gain a better perspective into what is happening on the 1 hour time frame. So from all parameters that we're seeing here, all parameters here suggest that a bullish momentum is imminent on the USD CHF. So like I said, wait for a retest of this level. That's the first scenario we want to be looking forward to. Wait for a retest of this level, reversal pattern on lower time frame. You could join the rally to the upside from that point. And if at any point in time we see a sharp breakdown of that level, price comes into this buy zone, we want to be scaling down to our lower time frame to look out for patterns that support a trend continuation to the upside. So now that we've identified this, where will our take profit target be? Well, to find where our take profit target will be, I think the first thing we did here was to identify the 0.97500 area as our first take profit target area. That was the first area we looked at. And then from a long-term perspective, we scaled up to the higher time frame where we went on to identify a selling niche. That is what we went to identify an area that has been an area where participants have gathered to sell the USD. So somewhere around the 0.990 area and the 0.9800 area appears to be another area we want to be looking forward to, a TP target on the USD CHF. So this is what we're going to be looking forward to here on the USD CHF. So during the New York session today, we want to be patient enough to wait for price action to come back into either our buy zone here or probably come back into this area here to look out for patterns that support a trend continuation to the upside. So that is that on the USD CHF. If you have any questions or you need further clarifications in that regard, feel free to drop a word or two in the comment section and I will be willing to be of help in that regard. Now moving on, we went on to talk about the Euro USD, and on the Euro USD I told you how much we expecting a bearish momentum on the Euro USD. I will show you how we got to this bus stop in a moment. So to make things more clear, let's scale up to the higher time frame. Now on the higher time frame, we have a very strong bearish momentum unfolding, and because of that we were able to connect the series of lower highs here to identify this bearish trend line. Let me show you. We connected these points together, so you can see how the sellers have been very strong in this market since the beginning of the year. You can see rejection, lower highs. We kept on finding lower highs and lower lows at this point. However, if we look at the structure we have during the course of last week's trading session, we can see that price was caught within a consolidation phase. As buyers were trying to push price to the upside, you can see what happened within this phase. It's a consolidation phase, giving us a clue into the indecision in this market, and it also gives us a clue into how buyers were trying to push price to the upside from this level. Look at what I'm talking about here. We can see buyers trying to push price to the upside multiple times, but every attempt failed as the strength of the sellers was quite very strong to negate all buying attempts. So one thing we saw here was that price continued to reject the 1.00 level, which is a very strong psychological level. We can see how this rejection happened multiple times during the course of last week's trading session. We saw the rejections here. We saw this rejection here. Though we had a breakout of that level here, we saw a significant breakout of that level, but it was immediately followed with a sharp rejection of the 1.0100 level, and this gives us a clue that this area is a very strong selling niche, and what we want to be looking forward to this week is a selling momentum on the Euro USD. Now that we've already identified that a selling momentum is very strong here, where do we want to sell the Euro USD? How do we want to sell it? Where do we want to sell it? What zone are we looking forward to selling momentum here? Now, when we scale down to the 1 hour time frame, one thing we were able to observe here is this consolidation phase. I was able to connect a series of higher lows here to find this temporary bullish trend line, and one thing we saw during the beginning of the week was the breakdown of this bearish trend line. So we saw the breakdown of this bearish trend line as a signal that the sellers are very strong, that all the attempts by the buyers was really met with stiff resistance. So during the course of yesterday's live session, I told you how we should be patient to wait for a retracement into our golden zone area, where we want to be looking forward to a reversal pattern. And remember how we got the sell zone area? It's the golden zone area of the impulse leg. So when we bring out our Fibonacci retracement tool, running through the previous impulse leg, we had somewhere around the 50 and the 78.6% as our golden zone area. That is where we want to be selling the Euro USD. And what has happened in the last 24 hours is this. We can see our price has come back into that selling zone area, and we've been seeing multiple rejection of that area in the last 12 hours. We can see though we had this impulsive move to the upside, but in the last couple of hours we've been seeing multiple rejection of this area, giving us a clue into the strength of the sellers. And one thing I want to be saying here is that you can either sell at this point or you wait for price action to come right back below the $1.00 level to join the decline to the downside. So this decline to the downside will be more comfortable if we can join right below the $1.00 level, which I told you is a very, very strong psychological level, and you can see it right below the bullish trend line we identify here. And if at any point we see price come down below the $1.00 level and we see an outright breakdown of this bullish trend line, then that's a signal that this bearish momentum is becoming stronger. And if this happens and we see a retest of this bullish trend line or this key level here, then we want to be looking to the lower time frame to look out for reversal patterns or structures that support a trend continuation to add more position to our existing trade. So the perspective on the Euro USD remains bearish on this one, despite the fact that we have scenarios where price went right above the $1.00 level. But one thing that still kept our NAV is the fact that we're still within the sell zone we identified during the live session yesterday. So now that we've identified this, where is our take profit target on the Euro USD? Our take profit target still remains at around the 0.98500 area, and the way we got this was as a result of extending this impulse leg here using our Fibonacci extension tool. Let me show you how we did that. We brought out our Fibonacci extension tool, run it through the previous impulse leg here, and we aimed at an area between the 127.2 and the 1414 area, which falls around the 0.98500 area as our take profit target. And this dovetails to about 150 pips to catch here if price moves in our direction. So this is what we are looking forward to on the Euro USD. So let's see how price action plays out during the New York session. Remember, we want to get ourselves prepared for that bearish momentum when it happens. And one thing I also said that will keep our comfort is that below the $1 level is most appropriate to be doing a sell. But if we see this is a sighted reversal pattern here, that is a double top structure or a head and shoulder pattern within the selling opportunity, within the sell window, we could be look out for breakout of structure on lower time frame, retest of structure to join the decline to the downside. So that is that on the Euro USD. Like I said, if you have any question whatsoever, feel free to drop a word or two in the comment section and I will be willing to be of help in that regard. So before we close today, I want us to take one more pair again. And which pair should I be looking at? Should we be looking at the JPY USD? Should we be looking at the JPY USD? Okay, let's look at the JPY USD. On the JPY USD as well, I'm having a selling bias on the JPY USD. I'm having a bearish perspective on the JPY USD. And how did I get to that point? Let me share that with you. When we scale up to the daily time frame, just like what we saw on the Euro USD, the momentum drive has been very, very bearish. And as a result of that, we were able to identify this bearish trend line. And when I scaled down to the 4 hours time frame, one thing I observed was that we have a key level sitting right around the 1.18400 level. If we look left, we can see how this level has been a major determinant of price action. We can see here it was a demand niche here, and then if we come closer to what happened during the course of last trading session, we saw how that area was a selling niche for participants in the market. So what simply happened here is that price broke down this key level at 1.18400 and did multiple rejection of this level to give us that bearish engulfing candle that took price right into the 1.16500 area. So now going into the new week, that is this week we are in right now, I was actually expecting that we're going to see price do a retracement of this impulse leg right back into the 1.18400 area, where I want to be looking out for patterns on lower time frame to join the decline to the downside. So this is my initial expectation on the GBP USD, that is waiting for price to come back into somewhere around the 1.18400 area where I want to be looking for selling opportunities. But the way things are going right now, looking at the current structure we have here since the beginning of the week, it appears that price might not go that far, but let's see what is happening on the 1 hour time frame. So scaling down to the 1 hour time frame, what do we observe here on the 1 hour time frame? Since the beginning of the week, price has been bearish. This is how it happened. It started at around the 1.17350 area and price went to as far as the 1.16450 area. Price came back again to the 1.17350 area, and then we've been seeing a consolidation phase around this area. And one thing I observed is that if price tries to break above the 1.17500 area, which I thought is going to be a move to the upside here that I'm looking forward to, we can see we had in the last couple of hours, price has been rejecting this level to the downside on this one. So right now, it is very obvious that even scaling down to the lower time frame, that is the 1 hour time frame here, we still have a very strong bearish momentum. One thing I did now is to identify what this structure here is evolving into, that is this consolidation phase that's been happening in the last 24 hours. We want to see what this consolidation phase is evolving into, and then let's see how we can take advantage of this bearish momentum that we are looking forward to. So now bringing out the line chart and then connecting the series of higher lows here, we have a temporary bullish trend line. Hold on a second, let me give this let's give it a dashed line instead, since it's a temporary bearish trend line. So one thing I want to be looking forward to here is that price should give me a signal, which is likely going to come in form of a breakdown of this bearish trend line. And if that happens during the New York session today, I want to be waiting for price to give me a confirmation in the form of a retest of the structure, and this can be seen on a lower time frame, after which I'll be looking for patterns to join the decline to the downside. So this is the scenario I'm looking forward to today on the GBP USD. So let's see how price action plays out. Remember, I told you I was expecting price to go as far as this key level here for that bearish momentum to happen. So if that does not happen and we see a breakdown of this temporary bullish trend line, then we want to be looking forward to a retest of that structure to join the decline to the downside. Now that we've identified the possible areas we want to be looking for selling opportunities on the GBP USD, the next question we'll be asking ourselves is, where will our take profit target be? Well, this is simple. Considering the previous impulse leg we have here, definitely we want to be projecting this impulse leg into the future, and the only way we can do that is to use our Fibonacci Extension tool. And if we bring our Fibonacci Extension tool, running it through the previous impulse leg here, what do we have? We have somewhere around the 127.2 and 1414 area as an area we want to be looking at as our take profit target here. So let's label this area for the sake of clarity. So we have somewhere around the 1.1550 area as our take profit target. So let's label this area. So we have our TP target somewhere around here, which will likely dovetail into about 150 pips to catch here on the Euro US. That is, if price comes from this area, that's around 150 pips. However, if price goes as far as coming back into the 1.18300 area, then we will be looking at somewhere around 250 pips to catch on the GBP USD. So this is the scenario we're looking forward to on the GBP USD, and I hope I made myself very clear. And I think this is going to be the last pair I'm going to be taking today. It's almost 3 minutes to 12 on the dot, and One thing I will be doing here is to do a quick recap of what we deliberated on so far, especially for those who are not part of the early hours of the session. So the first pair we deliberated on today is the US oil, and what was our expectation on the US oil? We were able to take some profit on the US oil yesterday. We took our ride right from the $93 level to as far as the 98 mark, where we took over 400 pips here, and since then we've been seeing a retracement phase of the previous impulse leg. So we are seeing this as an impulse leg, remember, and we saw multiple rejection of this area, which incited the retracement phase that is going on right now. And one thing I said here is you want to be patient enough to look out for buying opportunity at our golden zone area. And how did we get the golden zone area? We brought out our Fibonacci retracement tool. We identified the 50 and the 78.6 area as an area we want to be looking out for buying opportunities. And how do we know if this retracement phase has ended? Well, what I said here is that we want to see price come into the zone. It could be the 94.50 area, or it could be around this area, wherever it is, or probably on this bullish trend line. What we want to be looking out for is a reversal pattern on our lower time frame. So it could be your double bottom structure, it could be your inverse head and shoulder pattern, whatever it is. We want to be looking out for multiple rejection of this area, and then we join the rally to the upside. So that is that on the US oil. We still remain very bullish on the US oil. Then we went on to talk about the US tech, where we saw a final breakout of the 12,570 area, which was, sorry, we saw a breakout of the $12,500 area somewhere around here. Remember, we had a channel we were looking at here. Let me show you. We had a channel we were looking at here where I told you we should be waiting for a breakout of structure to give us a confirmation that we are going bullish, and we saw the breakout happen here. Price came back to do a multiple rejection of that level, and we took advantage of this move yesterday. And for those who are not yet in this trade, well, for those who are in this trade, I told you to move your stop loss to break even to protect your position against any sudden pullback. And for those who are not in this trade, I told you that since we already have a breakout of the $12,570 level, we want to be waiting for price action to come back into the 12,570 level, where we want to be looking out for patterns on lower time frame that supports a trend continuation to the upside. And if we look closely into the structure we have here, we can see that the $12,570 area also shares a confluence with the bullish trend line we were able to identify here on the 1 hour time frame. So going into the New York session today, we have two parameters that is going to be guiding our action on the US tech. We have the key level at the $12,570 level, and we have this bullish trend line, as we want to continue to see price oscillate right above both these parameters to be comfortable in our buying position on the US tech. And remember, I told you how this bullish momentum, this potential bullish momentum, is likely going to be a temporary one. And the reason why I said this is because of the previous the prior leading price action. We've been on a very strong bearish momentum. We have an impulse leg here, so I'm seeing this move as a retracement phase of that impulse leg that is likely going to come into our golden zone area. So our take profit target is going to be sitting right around the 12,800 and the 13,100 area, where we want to see how price action is going to relate with this level. So are we going to be having an outright breakout of that level to give us a signal of a trend continuation to the upside, or are we going to be having a reversal pattern right below this trend line to send price crashing to the downside? That we never can tell until when price gets to that area. So in the meantime, our take profit target remains within that zone. Then let's see how price plays out during the New York session today. Then we moved on to the USD Jpy, where I told you how strong the bullish momentum on the USD Jpy is, and we already have a bullish engulfing candle that took us right out of the structure here, and we are seeing this as a reversal pattern, inciting a retracement of the previous impulse leg, where we are looking for buying opportunity right around the 13,700 and 137.700 area and 137.00 level area. So what we are waiting for right now on the USD Jpy is to be patient and wait for price action to come to either this zone where we'll be looking out for patterns that supports a trend continuation on our lower time frame to join the rally to the upside. And for those who take counter trend opportunity, I told you you could take advantage of this move since we have a reversal pattern here. And when we see a reversal pattern like a double top structure, we have a neckline broken. A retest of the neckline should give us a confirmation to join the decline. So if you are a counter trend trader or a short-term trader, you could take advantage of the bearish move to this downside, which will probably be giving you around 100 to 150 pips on this one. But if you are a long-term trader like me, then you want to be waiting for price action to come into this area to be taking advantage of that bullish momentum. Either this area, we want to have a sharp rejection of that area or a reversal pattern to join the rally from this point. And now if that happens, where will our take profit target be? Well, we have somewhere around the 140 Japanese yen area as our take profit target, which will be dovetailing to about 200 pips to catch here on the USD Jpy. Then we went on to talk about the USD Chf, where we also have a similar scenario with what we have on the USD Jpy. We have a breakout of structure already on the 1 hour time frame. We have this breakout of structure, and we expect that the retracement phase is likely going to happen in such a way that price comes back into somewhere around the 0.96200 level, where we want to be looking forward to a reversal pattern within this zone to join the rally to the upside. Then I also stated here that we had a consolidation phase since the beginning of the week. Somewhere around here, we saw our price juxtapose within this area, contracted within this triangle, and then we saw a breakout of this triangle here. Then I said if price comes back to do a retest here, that is if price decides not to go this far, that decides to do a reversal pattern around this point, then we want to be joining the rally from this point. However, if we see a sharp rejection, a breakdown, and price moves to as far as this area, then we want to be patient enough to wait for patterns on lower time frame that supports a trend continuation to the upside. So on the USD CHF, we have two scenarios here. We have buying potential right around this area, and we have another one right within the buy zone that we identify here. Then we moved on to the Euro USD, where I told you I'm expecting selling momentum on the Euro USD based on the current structure we have here on the 1 hour time frame. Remember, we caught up within a consolidation phase during the course of last week, and because of this consolidation phase, I was able to draw a bullish trend line here, and then we saw a signal in the form of a breakdown of that bullish trend line during the early hours of this week. Then I was expecting that this move to the upside will be a retracement of the previous impulse leg, where we identify a sell zone right above the $1 mark. And I told you we want to be looking forward to a reversal pattern within this area to join the decline to the downside. However, in the last 24 hours right now, we actually have seen multiple rejection of the zone here. But one thing we saw during the early hours of today was this engulfing candle that took price right above this area. So one thing I want to say here is this: let's be patient enough. If you are still in this trade, you'll be in a loss right now. But if you are not, let's be patient to wait to see, look out for structures like a double top structure or inverse head and shoulder pattern, breakout retest of structure on lower time frame to join the decline. And like I said, below the $1 area seems most appropriate to be in a selling position with the current structure we have here on the Euro USD. And I also made mention here that if at any point in time we see or we witness an outright breakdown of this bullish trend line and a retest of the trend line or the key level here, we want to be looking out for patterns on lower time frame to add more position to our existing trade on the Euro USD. Now, to close the day, we close the day with the GBP USD, where we're also expecting a bearish momentum on the GBP USD. And I was able to share with you two scenarios that I'm looking forward to. The first scenario is that I'm expecting price to come into the 1.18500 level area, where I want to be looking out for patterns on lower time frame to join the decline to the downside. Or are we going to be having an outright breakdown of this bullish trend line we identified here on the 1 hour time frame, after which a retest of the structure should give us a confirmation to join the decline. Our take profit target on the GPUSD remains at around the 1.15500 area, and let's see how price action plays out in that regard. So on this note, I want to be calling it a day, and I also want to wish you guys best of luck during the New York session today. And one thing I always like to state at the closing session is that closing time is that whenever we sight a signal, it's coming from in form of an engulfing candle in whatever direction it is. Do not get too excited, as we always want to wait for confirmations before we join the rally or decline at any point in time. So on this note, I wish you a wonderful day. Best of luck during the New York session, and I hope to see you guys tomorrow, same time, 11 a.m. West African time, 11 a.m. West African time, 10 a.m. UTC, so that we can come again to look at how well these pairs that we treated today have been doing so far. So thank you for watching, and do have a wonderful day. Bye bye.